Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today's Thursday, March 12, 2015. Daily chart of the SPY, and what we had today was an up day followed by a non-completion of the target. Okay, so what we have is an unresolved target, and really, I'm going to go to the S&P E-mini contract for a second because this is where I do my calculations. And my calculation is for a low, or was for a low, of about 2030. Okay, 2029, we'll call it 2029. Okay, that's the target. All right, so that corresponds with the 203.25, 203.50 area in the SPY. Now, what does that mean? What that means is that it's a bit of a quandary now because there's a whole laundry list of things that happened and can happen. And what we have is we have basically right now two unresolved numbers, one on the downside, one on the upside. So the downside is here. The upside now is 2065. Okay, 2065. That's in the S&P E-mini contract. So figure that's about roughly, let's call it 7 points higher in the S&P, 70 to 80 cents higher in the SPY. So it puts us, we'll call it about 208, give or take. Okay, so up in this neighborhood, 208. Okay, so that should come in somewhere between Friday and Monday. Okay, but here's the scenario. So let me play this out. Okay, so we have an unresolved number on the upside, unresolved number on the downside. The ideal scenario, okay, never happens with the ideal scenario, but you never know. The ideal scenario is to go up and complete, we'll call it the 208 area between tomorrow and Monday, and then by late next week, be down by the 2029 or 203 to 203.50, 203 and a quarter area in the SPY by late next week. Now, next week is extremely important. Well, let me get to that in a second. Here are some of the things I'm looking at. I just want to give you a sense for some of the indicators. I have literally dozens of indicators, but here are the ones that are actually conflicting right now, which is interesting. So first off, you have today closed above this high from 2 days ago, which is a bullish sign, okay? It does it on light volume, which means there was less conviction behind the rally. That's negative. You have, remember the divergences from yesterday? The transports were up big, the broker-dealers were up big, the IWM was up, the small cap index was up, yet the major indexes, the Dow, the S&P, and the NASDAQ were basically lagging. So that was a intermarket divergence, and that was actually considered a positive divergence because the transports were up, which is a positive divergence, and what that means is we could expect higher prices, and we got them today. So the transports were up big again today, another 108 points, and Dow was up 260. It was just a strong day across the board. The NASDAQ lagged a little bit, primarily because of Intel and Microsoft. Other than that, some other stocks performed okay. So next week, here's the important stuff. So next week we have an eclipse, okay, and that usually surrounding an eclipse, I think it's on the 18th or 19th, and that actually a lot of times will send the market in a turn, meaning the other way. It'll send the market in the other direction. Options expiration, quadruple witching options expiration next week. You have a Fed meeting next week. You have an unresolved downside target. You have, let's see, the volume was light. I talked about that. I'm looking at my notes here. Okay, so yeah, we got everything. So all those things converge together, and that's why you have two unresolved positions, okay? So I am expecting higher prices into tomorrow, and ultimately I am expecting lower prices into late next week. However, the caveat is If the S&P E-mini and back, let's go back to the E-mini. So here's the waterline. Here's where we know we're wrong on the downside. Okay, this is important. Where are we wrong on the downside? Okay, and by the way, if we close above this level here, okay, from the 10th at 2078, all right, and this is the June contract now. Before we were on the March, now we flipped over to the June as of today. Okay, if we close above 2078, okay, into Monday, for example, or before, all that other stuff on the downside is off the table, and that unresolved number on the downside is going to have to wait. All right, so that's the net there. All right, I think that's everything I had in the S&P. Just double checking my notes. Yeah, that's about everything I had in the S&P. So upside target is 2065, 66 in that neighborhood, and the S&P E-mini gives you about 70, 80 cents on the upside of the SPY. Target is about 208. Anything really above there, and certainly if we close above this level here in the E-mini, and let's get the corresponding level in the SPY from the 10th, okay? Well, that's a different number because we had the overnight session. All right, I'm going to have to work on that. I'll have to get that tomorrow for you. It'll have to be a calculation, so I don't have it now. Okay, and the reason that happens is because the E-mini contract trades, it doesn't trade 24 hours a day, but it basically trades overnight on the Globex session, and then this data I have right now that I'm showing you in the SPY is just is normal market hours trading, and that's why you see a divergence in the way the chart looks. Okay, let's go over to gold. So gold is still struggling. There's not much going on. Couldn't form a rally today. Again, I'm just going to go to the 10-minute chart and show you. Again, we had the same routine. We were up in the morning, and then we sold off throughout the day. Here we are, up in the morning, and then we sold off throughout the day and really finished flat on the day. And if you go to the daily chart, okay, there's just no good news here yet. We just haven't seen the market tell us that it's reversing yet. You're going to have to see, most likely, we were talking about this in oil, and it's the same routine in gold. You're going to have to see a flush and a reversal in order for me to get interested in gold, because right now, without a definitive direction, without a trend, I mean, essentially you're in a downtrend now anyway. So until I see a reversal, there's nothing telling me higher prices are coming, although, believe it or not, as crazy as next week is with all that stuff going on, I do have an indication for higher prices in gold, but we're going to have to close above 1160 to even entertain those higher prices, which would bring us into the 1180s by late next week. But until we can get above 1160, there's nothing doing. So those are my water lines in the sand, if you will, in gold. Let's go over to oil. Oil was another dog today. We basically broke down below the low of this channel that we've been looking at for a number of sessions, probably a few weeks now. And, here you are today. Whoops. There you are today. You came below that channel, and that's bearish. There's lower prices ahead. And what was interesting today was oil was always going down with the dollar rallying, and today the dollar actually finally sold off a little bit. Let's go look at the dollar chart. Interesting, dollar sold off a little bit and put in a down day. It was down much larger earlier in the morning. And if it stayed down there, it would have been a reversal day, but this doesn't count as a reversal day. So we have to see what happens next. This could just go sideways and then higher again. And there's higher prices one way or the other in the dollar. But if you can get a pullback into, for example, the 95, 96 area here, that would be just an all-out buy. You'd have to buy the dollar because you're going to see, north of 104, 105, 106 or higher, probably this year or into early next year in the dollar. So the fact is, let's go back to oil. The fact is the dollar's been rallying. Oil's been selling off. That's not oil. Oil's been selling off, and now today the dollar sold off and oil still sold off. And what that tells you is there's lower prices ahead. And even when we do get there, whenever we get there, you're still going to have to fight through the top end of this channel. It's only about $55, $54 a share or a barrel. And so there's really no definitive direction. It's a downtrend. I mean, look at the longer term picture here. I mean, that's a downtrend in earnest. Looks like we're going to go down and test these lows at some point, and there's just nowhere to buy oil right now. As far as the energy stocks go, you can see rallies in energy stocks once the market puts in a bottom, if it hasn't already. And you saw some weakness today in some of the energy sector. It didn't follow the broader market, primarily because the price of oil, crude oil, was down. But eventually they're going to rally with the market, because the whole energy sector can't stay down and have the market rally, in earnest. So it'll have to be pulled along. Let's go over to the bond market. The bond market it started up today. Let's go to the hourly chart. Started up today pretty good after some economic data this morning at 8:30. That's the daily. I want to go to the hourly. And then we sold off. We popped up and then we sold off throughout the day. But I still think there's higher prices. If I switch back over to the daily, remember 124 and a quarter. Well, let's go to the TLT. That was the 30-year bond. Let's go to the TLT. So 124 and a quarter was the buy zone, and here we are. We hit 128.30 today, so 128 and a quarter, and then we pulled back. And then I still think there's a little bit more in the tank on this one. I'm looking for the 50-day moving average on this move. Maybe next week we see that if the market does pull back. Maybe we see lower yields. So if you go to yields, and remember last night I told you that in order to see lower yields and higher bond prices, we're going to have to see yields close below the low from yesterday. And lo and behold, the low from yesterday was, that's not it. The low from yesterday was 2098, and the close today was 2096. So technically that qualifies. We'll have to see how the next few days plays out. If we're going to see lower yields, I believe we will into next week. I think that's everything I have. That's a lot of data. So hopefully it's helpful. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in, folks, for another episode of Common Sense Market Analysis.